Hello, friends. Happy Friday, and welcome to another episode of the Block Thrasher Daily Crypto Update, where we are simplifying crypto by shattering the complexities with news, commentary, analysis, education. It is Friday, April 23rd, and it is a bloody Friday. It hurts. There is a reversal market correction happening at the moment. Versal is our word of the day. V-E-R-S-A-L. Versal. It means universal or whole, and that is exactly what is happening here. The entire market is down. Total market capitalization is down 11%. Ouch, that hurts. We've fallen below the $2 trillion mark. We're now at $1.88 trillion. Bitcoin dominance is at 49%, and Ethereum is at 13.9%. We're seeing the lowest gas prices we've seen in a long time with 81 GWAY for standard. That's incredible. Bitcoin is down 21% on the week. This looks like a fantastic buying op, friends. It is currently 49,143, down 9.5% in the last 24 hours. Ethereum has taken a hit in the last 24 hours. It is down 12% to $2,264.72. Binance Coin, same thing, down 12.5%, $499.80. XRP taking a hard hit on the week as well, down 36% on the week, down 15% in the last 24 hours. It is now $1.11. That hurts. It all hurts. Everything hurts. Cardano down 26% on the week, down 11% in the last 24 hours. Now $1.09. Polkadot, same numbers, same. Everything's down. $31.70 for Polkadot. Dogecoin, still up on the week, 27%, but down 19% in the last 24 hours. It is currently 22 cents. Uniswap down 14% at 31.58. Litecoin, 233.75. Bitcoin Cash, $787. Chainlink, $32.68. Similar hits all across the board, 20%, 20, 15, 15, 20. Oh, it's just, it hurts right now. Solana's one I've been keeping an eye on a lot. It is still up on the week, 25%, but down 6% in the last 24 hours. It is now number 16 in market cap, so it does continue to climb as was expected. Well, that's happened. That's what's happening on the market, and there's just not a lot of news today. I'm probably going to just keep this episode short. I just got so much stuff going on that I've got to deal with right now, and just even getting this done was difficult. But let's take a look at a couple of things here. What is going on with this? Is it a price correction, or is it a result of Biden's tax proposal? That's the number one thing that people are talking about right now that might be a cause for this current downtrend in the market. You know, is it that, or is it just a normal correction? Bitcoin has fallen below $50,000 for the first time since March 7th. Here's what you need to know, according to Scott Cipollina. Bitcoin's price has fallen to approximately $48,200. That's Bitcoin's lowest price since March 8th, and a 33% drop from its all-time high of $64,445 on April 14th. Other cryptocurrencies have performed even worse than Bitcoin, as we just saw. Everything's down 20%. One announcement that has been attributed to the downturn is President Biden's recent proposal to increase capital gains tax, levied whenever a profit or loss is made upon the sale of an asset, for instance, Bitcoin. So the proposal would increase capital gains taxes for the wealthiest of Americans to 40%. Now, I think this breaks this down a little bit, so let's take a look and get more details on that. According to CNBC, Biden's proposal would tax long-term capital gains, which right now is about 15%, I believe, those accrued by selling assets held for over a year as ordinary income, and would apply to those with more than $1 million in annual income. All right, so there's a couple of things to note here that are important. We're talking about more than doubling the capital gains, but apparently this is only for individuals who have an income of more than $1 million a year. So most retail investors are not going to be affected, but this is a big, big deal for the wealthiest individuals and for the institutions, of course. This tax rate, which would be higher than the top federal tax rate on income, has stoked consternation among crypto traders, and not just crypto traders. This is going to This is going to upset all of Wall Street, all traders across the board. According to existing U.S. legislation, U.S. taxpayers need to pay capital gains taxes whenever they buy or sell cryptocurrencies. Despite being hailed as a store of value independent of governments and politics, it's not unusual for Bitcoin to react to real-world news. Curtis Ting, Kraken's managing director of Europe, told Decrypt, "This won't be the first time the market has given a knee-jerk response to real-world events, and it certainly won't be the last." So what else might have caused crypto's downturn other than Biden's tax proposal? Kraken's trading team told Decrypt that they have observed significant selling after Bitcoin fell below 50,000. While it's tempting to look at the news cycle, it seems more probable that rather than it being the Biden story, that the technical and psychological importance of the 50,000 level is most relevant. That's Jonathan Miller's opinion over at Kraken. He's the managing director of Australia. The drop in prices are the latest in a long line of corrections. In February of this year, Bitcoin's price fell $10,000 in a single day. I don't know if you all remember that or not. It was, I think, on a Monday. It was like a bloody Monday, we were calling it. And Bitcoin took this huge haircut and just dropped $10,000. This is normal. This is what happens in every market, in this market, in the crypto market, and in every bull market. And so, as opposed to the other now, it's like, do not panic, do not worry. This does not mean that we are experiencing the end of this bull run or the end of this incredible trend that we've been experiencing and seeing in movement toward mass adoption with the level of institutional investors that have been coming in. I can almost guarantee you that we will have a story or two to talk about in the next couple of days of how the big players, the institutional investors and whatnot, the whales came in and bought up. And typically what happens is all of the retail investors, all the SafeMoon people and Dogecoin and all of that, they just panic and they're going to sell, and they're going to sell right into the big boys. Happens time and time again. At the time, Bitcoin analysts at Quantum Economics, referring back to that crash, that $10,000 drop in Bitcoin in one day, which was the biggest crash in history, Jason Dean told Decrypt, "A Bitcoin dip like this is just what the doctor ordered. We'll go dance in it, and when it ends, we'll be fresher, relieved, energized, and ready to go again." And I agree with that analysis. Nothing has fundamentally changed. All of the things that we've been chronicling here on the Block Thrasher Daily Update, chronicling mass adoption, story after story after story after story of companies starting to accept cryptocurrency, of major players starting to, we can just go over it all again if we wanted, but PayPal and Venmo and, on and on. There's just sea change occurring. And so the fundamental underlying details and data has not changed, right? So no reason to panic. All right, we'll look at one other thing today, which is that the SEC seeks to knock out Ripple's defense, says they had no duty to warn anybody that XRP, that they considered XRP to be a security. And, this is just hilarious because that's their job. Like, it's the SEC's job to determine what is a security and what is not a security. They're the regulatory agency. So I don't know. We'll see. Let's see what they had to say here. Taking aim at one of Ripple's core legal arguments, the U.S. Securities and Exchange Commission, SEC, is asking a court to dismiss Ripple's defense that there was lack of due process and fair notice, contending that the government had no duty to warn Ripple that XRP was a security, according to a new legal filing on April 22nd. The thrust of Ripple's defense is that the SEC was obligated to, but did not specifically warn Ripple that it was violating the law before the SEC filed suit. argued the SEC in the preliminary statement of a memorandum of law filed in its support of its motion to strike Ripple's lack of due process and fair notice defense. The defense focused on what the SEC did not do before it filed this enforcement action, is legally insufficient and should be stricken, the SEC asserted. Now, it is interesting because with a lot of law, it doesn't matter whether you're aware of it or not. If you get pulled over and the officer says, do you know what the speed limit is? And you're like, I have no idea, and it's 35 and you were going 65. Well, guess what? You're going to get a ticket. So ignorance is usually not, ignorance does not free you from obeying the law. Like typically for most of us, for regular people, it's like a judge will say it's your responsibility to know what the law is. However, this might, this is a little bit different because this is not codified law where it's like, there's a speed limit, it's been passed, it's posted, all that sort of thing. There's no question. There's no entity that sits around and decides whether or not, you are allowed to drive that speed or not or whatever, right? So I'm just saying that the SEC is a regulatory agency that makes these rules up, right? Like it doesn't go to Congress. It doesn't go through this process of determining what is or what isn't, or that sort of thing, right? So the SEC has a responsibility, and that's their anyway. So we'll see what is Ripple's contention that the SEC must warn a market participant about its legal violation, or that the SEC must issue regulations or guidance before the SEC can exercise the authority Congress conferred on the SEC to enforce the securities statutes, finds no support in the due process clause or any other principle of law, the SEC wrote. I got to tell you, the Ripple's argument makes more sense here in this case because this is a new technology there's not a lot of clarity. Like nobody knows. XRP has a good argument. Nobody would have known unless the SEC declared it to be a security, because that's what their job is to determine these types of things and to add clarity. And they didn't do it for like 7 or 8 years. They didn't do it. And so now they're trying to take action. The SEC filed a lawsuit against Ripple in December, alleging that its sale of XRP was an unregistered securities offering worth over $138 billion. The SEC also named Ripple's executive chairman Chris Larsen and CEO Brad Garlinghouse as co-defendants for allegedly aiding and abetting Ripple's violations and making $600 million in personal profits from their unregistered sales of XRP. According to legal filings earlier this month, Garlinghouse and Larsen are seeking to have the charges against them dropped. Earlier this week, XRP holders filed a motion to intervene in the lawsuit as a third-party defendant in the hope of protecting their interest in the lawsuit. This is fun stuff. A key issue in the SEC's lawsuit against Ripple is whether transactions involving XRP constitute investment contracts and therefore securities subject to registration under Section 5 of the Securities Act of 1933. According to Ripple's answer to the SEC's complaint, Ripple had asserted 4 defenses. First, the SEC had failed to state a claim. Second, Ripple did not violate Section 5 of the Securities Act because XRP is not a security or investment, quote, investment contract. I don't see how it's an investment contract. And no registration was required in connection with any distribution or sale of XRP by Ripple. Third, the SEC had failed to allege a reasonable likelihood of future violation by Ripple. And fourth, the SEC had failed to prove fair notice that Ripple's conduct was unlawful and in breach of Ripple's due process rights. In its new filing this week, the SEC asserted that it had provided guidance in the digital asset space, citing its 2017 DAO report concerning the DAO tokens, which concluded that the offer and sale of the DAO tokens were required to comply with the federal securities law, including the requirement to register with the SEC or to qualify for an exemption from the registration requirements of the federal securities laws. Quote, the SEC's message to digital token issuers was clear. The use of distributed ledger or blockchain technology, which underlies XRP and many other digital assets to raise capital, must comply with the federal securities laws, the SEC wrote. Okay, yeah. That's just a general statement. That means nothing. Then SEC Chairman Jay Clayton also repeatedly gave market participants notice that the SEC could view investments involving digital assets as offerings of securities. The SEC asserted. Could. Given the historical advice Ripple had received since 2012, questions from market participants on the obvious question of whether Ripple's offers and sales of XRP required registration under the securities laws and the SEC formal investigation, defendants were aware for many years that the securities laws could apply. Yet defendants never sought a no action letter from the SEC, SEC lawyers wrote. The SEC also argued that the fair notice required to satisfy the Constitution's due process clause was that the statute itself provided fair notice. Ripple's defense, if accepted, would mean that any time an agency seeks to apply a long-existing statute to a specific set of facts, the violator can argue that the agency's silence before the filing of the enforcement action precludes liability in that very action, the SEC wrote. That is not and should not be the law. Noting that financial regulation in the U.S. was conducted by multiple agencies and departments whose jurisdictions at times overlapped, the SEC asserted a 2015 FinCEN settlement on the money services question did not impose on the SEC and duty to remind Ripple of its obligations to comply with the securities laws that market participants specifically raised with Ripple long after that particular settlement. Indeed, that settlement did not involve the federal securities laws, nor was the SEC a party. It's interesting because, as is common, you hear Ripple's lawyers and that makes a lot of sense. And you hear the SEC's arguments are like, oh, they've got some points there too. It's also intentionally obfuscated, and that's like, who knows? Trying to analyze which way this thing's going to go. Not easy. Some regulatory clarity in the U.S. could be emerging. Earlier this week, the U.S. House of Representatives passed an Eliminate Barriers to Innovation Act of 2021. It's always also fascinating to me how everything receives a super positive name, right? It's the Patriot Act, which was like the opposite of what patriots would actually want, which is a clamping down on our freedoms and invasion of privacies. Or the Affordable Health Care Act, right? And healthcare hasn't really gotten any more affordable. Or in this case, Eliminate Barriers to Innovation Act, which really means like just more regulation that's not going to be necessarily helpful. Maybe not. All right. I'll scale that back. I'll step that back a bit and say, who knows? We have to wait and see. But my point remains. It's like, let's create a bill that's going to make it more difficult for business to operate, and let's just give it a really really positive name, right? Super, So they are talking about earlier this week, the U.S. House of Representatives passed an Eliminate Barriers to Innovation Act that aimed to get the SEC and Commodity Futures Trading Commission working together on digital assets. All right. The SEC versus Ripple lawsuit is currently in the discovery phase, with both sides battling over what information to share with the opposing party. Earlier this week, the SEC filed a request asking a judge to stop Ripple from seeking information of internal SEC staff communications that had been excluded from discovery. and we talked about that. It'll be interesting to see what the judge does. I'm going to guess the judge is going to grant the SEC's wishes and just say, shoot. Just imagine what can happen with that. I mean, the internal communication of the SEC people could be so damning. And obviously, the judge here has to protect the SEC. So So we'll see. We'll see what happens with that one. But it is kind of hilarious because what Ripple lawyers are doing here is they're turning the tables on the SEC. The SEC wanted to search the private banking. They wanted the private banking records of the Ripple executives. And so the Ripple comes back and is like, well, we want the private messages of the SEC because they could contain pertinent information to this case as they were discussing or not discussing what to do, not only with XRP, but with all crypto. The SEC is in the process of complying with the court's April 6, 2021 order. The order and has begun reviewing tens of thousands of external emails from the identified custodians for production pursuant to the order, the SEC wrote. Defendant's approach is part of a pattern of gamemanship with respect to discovery, the SEC wrote. Defendants do not actually seek relevant evidence, but rather seek to harass the SEC, derail the case's focus away from its merits, and bog down the SEC with document review. Michelle, okay, that's just all right. Hey, you know, it's entertaining, right? It's entertaining, to say the least. At least it gives us something to read about and laugh at about here frequently. Well, it looks like the market is starting to bounce back a little bit, at least in the last hour. We're seeing some green, actually green all across the board, 3, 4, 5%. Continuing to see what happens here today. It's going to be fun. Okay, friends, I'm going to wrap it up for today. I just hope you have a phenomenal Friday and enjoy this weekend. Have some good time, maybe with friends or family. Keep your chin up. These things happen in the market, and no real cause for concern. Remember, you're not at a loss unless you sell. And time has proven that hodlers benefit most. Remember, it's a great day to buy. This is a buying opportunity. Keep stacking, keep buying, keep earning crypto. All right. Love y'all. Have a great day. Talk to you soon. See you tomorrow. Bye now.